Hey everybody, it's Amy Nakos, and I am here today to present second quarter 2018 Summit County real estate trends. This is the trends packet that we provided for the Mountain Trends presentation with Your Castle Real Estate, and I'm going to be focusing only on the Summit County market. There will be a link for you to actually download this report if you would like to do that, so check for the link so you can follow along. All right, here's my information. That's me standing over Breckenridge. You can have my phone number, my website, and my email if you feel like you want to contact me with any questions on this. Who is Your Castle Real Estate? Briefly, I'm just going to let you know that I run the Summit County office of Your Castle Real Estate. We have hundreds and hundreds of brokers in the Denver metro area. We also work Vail, Winter Park, and Steamboat, and then some other more remote locations like Durango and Grand Junction on the western slope. So we can help you in most of Colorado. Here's a map. Those dots are where we can work. So again, if you need help anywhere in Colorado, you can reach out to me first and I will hook you up with the right person. Let's get into Mountain Trends. All right, so what we do at Your Castle Real Estate is what we like to do is compare the different mountain markets. And what you're going to see here on this chart is we are comparing Steamboat market to the Vail Valley Eagle market, then Summit, then Winter Park and Granby. What this chart does is it's going to show you if you want to be a condo buyer in any of these markets, what your average price is going to be, what you're going to pay for an average condo. So you'll see in Vail Village, Lions Head, Bachelor Gulch, our average condo price there is $1.5 million, whereas in Summit County, just over Vail Pass, we are 1/3 of that price at $540,000 for an average condo. Our price change, and that's a trailing 12-month change. So we're comparing the end of June 2018 to the end of June 2017. And that's just the price change. So you can see that we've had a dramatic increase in prices. The Copper Mountain -5, I'm going to tell you that Copper Mountain has not dipped. Their average pricing has not really dipped 5%. That statistic is really just it's from what the properties that had actually sold. So there was just lower price properties that sold during that time, during this time at Copper. But we haven't seen appreciation dip. Again, just looking at the Summit County, you're going to see that our average months of inventory is 3.3 months. In any type of market, under 4 months is a seller's market, and over 7 months is a buyer's market. You'll see that down in the right-hand corner. We have 3.3 months on this chart, but note that generally our days on market has been much less. Our average months of inventory was down at about a month the last time we did this. Third quarter 2017. The reason you're seeing this is when we pull the data from the end of June, that's when we have the most listings in Summit County. So it's going to look like we have more months of inventory, but that got absorbed relatively quickly, and 3.3 as of June, still very low. What this chart does is it's going to show you how appreciation compares in different markets. So you'll see in Denver Metro, the average appreciation from 92 to 2016, 5.4%. Vail saw 7.8%, Summit 6.7%, Steamboat, we don't have enough data to go back to actually pull that, and then Grand 5.1%. So if you were to have purchased a house back in 1992, you would have saw an average appreciation of 6.7% a year in Summit County. This chart is a great chart that I actually asked our fantastic chart people to create, but here's what it shows. I get asked all the time, how is the market going to hold up in Summit County? How much longer do we have before it starts to dip again? And, you know, if I knew that, I'd be on CNBC. I wouldn't be sitting here recording this little podcast. But what you can see on this is that, let's just look at the Summit line. It's the green line. And then the Denver line is the purple dotted line. So right at the recession in 2008, Denver dipped right away in 2008. And you can see Summit was peaking. And we actually continued to have a relatively good market for a few years. Our dip was 2013, but it really started to dip in 2011. So you'll see 2011, 12, 13, Summit County's dipping. Denver's back on the rise. So we do tend to trail Denver. Previously, I would have said it was a year to 2 years, but this chart is showing that in the last recession, Summit County trailed Denver at least 2 years. So what I say about that is, well, when Denver starts to dip, when the Denver market really starts to slow, and we can actually see that, we will then know that Summit County will follow, anywhere from 12 months to 3 years. This is a summary of the market conditions in Summit County. It compares all of the different submarkets to the whole market in Summit County total. What you're going to see here, and this is just good to see, again, we're looking at the last year, June 17 to 18, and we're comparing that to 16 to 17. So it's a year-over-year analysis. And when you click on the link and you have this chart, you can look at it more carefully and look at which area you're most interested in. But you can see Breck overall prices are up 5%, copper's down 5%. Again, that's just a matter of the mix of what's sold. Dillon up 20%. That's a huge jump for Dillon. Silverthorne up 19% in average price. The next one is units sold. What you're going to see here is that with those down arrows, we have a lack of inventory. We have less inventory to sell this year than we did last year. So that's why that number is going down. And then months of inventory, we discussed that on a previous slide, but you can see as of the end of June, that is the months of inventory for each submarket, with the total Summit County market having 3.3 months of inventory. Here's our Summit County price trends. This is back from 1992. Again, you'll see that we did peak in 2008, 2009, and then our dip, the dip that we had in average pricing from the recession, overall was about 18%. Denver lost about 25% of their values during that time. So we have actually recovered from that back in about 2016, and in 2018 we are above the height of the market in 2007. You'll also see the yellow line. That yellow line is just a trends line. What it shows you is it's just, if we were to average out the trend, this is where the line should be. And you can see that we're right at about that line with our 2018 average pricing. If we take out the correction, the 18% correction, Summit sees 7.7% of annual appreciation versus Denver's 5.9%. All right, this is our volume. How much volume have we sold? And then you'll see our volume dropped in 2009 down 63%. And our volume has not recovered to the height of 2006, 2007. There was some new construction going on then and a lot of turnover in properties. For 2018, we're right on the trend line, slightly below. So we do have a lack of inventory, as I mentioned. Prices are going up, but we are staying steady. This is a great chart for you to see the trends on what happens in the overall Summit County market with days on market, discount, and months of inventory. So days on market, it wasn't unusual back in 2010 or 11 to have at least a year on the market. We're at 50 now, and that often includes time that the property's in escrow. So we need about a 30-day escrow usually. So things are moving pretty quick. Average discount, what you'll see there is that we're closing just under or just above 98% of list average. So that would be just under a 2% discount off the list price. And months of inventory, I think we've discussed this a few times. We are definitely under the balanced market line, putting us at a seller's market. All right, these are micro trends for each community. And we'll talk through them quickly. Again, you can click on the link if there's a particular market that you want to focus on, or you can always reach out to me and we can talk about your market specifically. Here we have Breckenridge. Note that for all of these charts, this is all of the properties in the purple and the condos are in the green. Average prices dropped 24% in Breckenridge from the peak. So we saw earlier that average price of all Summit was 18. Breckenridge saw a 24% dip in their pricing, but you will also see that we have recovered from that. Here we have Copper Mountain, and as I mentioned with Copper Mountain, prices have been stable, and the price drop that we saw was driven by the mix of what was sold. What we like to talk about with that is if you have a used car lot and 1 month you sell a bunch of Lexuses and then the next month you sell a bunch of Toyotas, you're going to have a different mix of pricing on what you sold. So Copper Mountain, Moving on to Dillon. Dillon saw a huge jump in pricing. And when we did this chart, we tried to figure out whether any of this was a new construction project called the sale lofts that came on the market. But this only includes sold properties. So the sale lofts are not part of this. So Dillon condos and overall homes have both seen a large jump in pricing. I personally attribute this to the fact that for one, Dillon Valley condos are affordable, and there's many of them. They turn over relatively quickly. So that helped to contribute because it's in the lower price point. We had much more demand for those. And also the submarket in Dillon is relatively small, so it doesn't take a whole lot of sales to get your average sales up to a higher number. Frisco. Frisco's hot, hot, hot. Everybody wants to live in Frisco. There's not enough Frisco to go around, and you're going to see that by what's happening with the average pricing. And when you look at the number of properties sold, especially in the condos, you're going to see that we have a lot less product to sell in Frisco, which pushes up the prices. If you are looking for Frisco, you want Frisco, you're going to have to be pretty aggressive, and you're also going to have to be willing to probably pay asking price. And if you find something you like, move quickly. We are pushing all-time highs, it says. Keystone. Got a new condo project in Keystone called the New Seasons at Keystone. We are seeing Keystone condos in high demand, where you can see on the chart for the average prices, even with the condos, how the prices have jumped. Overall sales are over 300 units per year, and we have more additional units coming in to the market, but they should be easily absorbed because with only 20, we're anticipating maybe about 20 new condo units coming on next year. When you have over 300 units per year, it will definitely help bring more inventory into the market, and it will certainly be absorbed. Silverthorne. Silverthorne has a lot going on right now. Summit Sky Ranch has delivered a number of homes and closed on those, and that helped bump up the overall price on the average price per property. However, you're also going to see that the condo prices jumped, and Summit Sky Ranch does not have condos. So we're just seeing an overall increase overall in Silverthorne. And Silverthorne is doing a lot to revitalize its downtown. If you are looking for more information on that, please contact me. But they're looking to pull together an area on the 4th Street where there's going to be a walking path, restaurants, residential, and they're also building up the area along the river where an entire section of the outlets is going to be taken down and turned into a community area along with shopping, dining, and other things. So Silverthorne is on its way to being a big, big town. Very cool. All right, this is the economics of renting a unit. I could probably talk for an hour on this, but what I really want to show you on this is we took 4 different properties that are on the market or were on the market about a month ago. I took 2 of the Keystone New Seasons at Keystone condos. So that's the Keystone 1-bedroom and the Keystone 3-bedroom. They're new construction. And then I took 2 properties that were on the market in Breckenridge. And we just ran the numbers. You know, we said, okay, what's the purchase price? How much money are you putting down? You'll see your cash outlay there. We use 4.4 as a rate for your mortgage. You'll then see your principal and interest payment below that, along with taxes and insurance. And then your total outlay plus the homeowners association. Your total cost per month is the next line. So for a 1-bedroom, 1-bath, your total cost per month, you're looking at about $2,094 a month. If you can afford a couple grand a month, you can have a condo in Keystone, your very own. Now, we talk about short-term rental income. Let's see how can we make up some of that $5,000 or that $2,000 a month into rolling that into some rental income and having it cover our costs. So what we realized there, or what we're assuming there, is that you can probably net maybe $20,000 on that 1-bedroom condo unit. Everything you're paying for the condo for the whole year is $25,000. So now, instead of being $2,000 a month, it's costing you $5,000 a year. It's a lot less. You're still subsidizing it, but it's $5,000 a year. We're also saying if you're in a marginal tax rate of 35%, you will have a tax write-off of $6,160. See, so now we are covering that